If you're hiring a 1099 worker, I would encourage you to find out what else they're doing, because this is where the real issue comes in, right? If they're working for you 40 hours a week over a long period of time, they're probably an employee no matter how you classify them.
Good morning, HR. I'm Mike Coffey, president of Imperative, bulletproof background checks with fast and friendly service. And this is the podcast where I talk to business leaders about bringing people together to create value for shareholders, customers, and the community. Please follow, rate, and review Good Morning HR wherever you get your podcasts. You can also find us on Facebook, Instagram, YouTube, or at goodmorninghr.com. On March 11th, the U.S. Department of Labor's revised rules for classifying independent contractors went into effect. And 5 months after the DOL published the revised rule, many employers are still uncertain about whether some of the people who perform services for or on behalf of their company can still be considered independent contractors. Joining me today to bring some clarity to the situation is Krystal Yates. Krystal is the president and founder of EBR HR Experts and Integrity People Group, which assists small and medium businesses in North Texas with their people management practices. With over 25 years of HR experience, Krystal is a certified HR expert with both the SHRM-SCP and SPHR designations. Krystal is a member of the Forbes Coaches Council and is a volunteer with Dallas HR. Welcome to Good Morning HR, Krystal.
Thanks, Mike. Good to be here.
So, the Fair Labor Standards Act covers a bunch of different employment-related issues, and anytime there's discussion around classification, people quickly begin to blur the lines between independent contractor status versus exempt or non-exempt status, or even things that have nothing to do with the FLSA, like right-to-work states. So let's start out by being really clear about what kind of employee assessment the latest DOL rule affects.
And the real thing that this triggers here is this person an employee or a contractor? And let me be real clear. I have this conversation a lot. There is no such thing as a 1099 employee. They are either a contractor or they are an employee.
And we hear that all the time. Yeah, this is a contract employee. Yeah. Well, they're an employee or they're not an employee, right? And they're either a business you're buying services from or they're an actual employee, right? I mean, those are your two choices for setting them up.
That is exactly right. Yes.
So let's just so everybody stop saying contract employee, stop saying 1099 employee. There's no such thing. So we got that put to bed. And that's what the new rule really affects, right? That status, whether this person's going to get a W-2 at the end of the year or we're going to send them a 1099. I mean, that's really what it boils down to. And my experience over the last 30 years has been that whenever an employer comes to me with concerns about, if I'm misclassifying, almost in any case where they're talking about misclassifying somebody, they already know they're doing it wrong. and they're looking for the justification, or that loophole to squeeze them into this other category. And I think that goes the same, whether it's exempt, non-exempt, or a contractor, independent contractor, or a regular employee. And, people really want, for some reason, to pigeonhole somebody in a different one. And there's probably reasons for doing that. They want to do that, but it's really expensive if you do it wrong and get caught.
And I always like to remind employers the burden of proof is on you. It doesn't matter if the worker came to you and said, I want to be a 1099. If they're not supposed to be, and you get audited, the burden of proof and the burden of payment in the form of back taxes and penalties is also on you. So this is not a mistake you want to make.
Right. And it's more work to have an employee on the books than just have independent contractor that you use for, a specific thing. But you bring a new employee on, you've got to treat them like a new employee. And so we've got payroll withholding and the employer contributions, which is the real thing I think bothers a lot of employers. But you also have to do a Form I-9. If you have to look at your health insurance plan. Does this person qualify now for health insurance? And you've got to comply with the state's payroll laws. So you're not going to wait on an invoice from this person. You've got the Texas Payday Act or whatever the law is in your state. You got to deal with unemployment, all that stuff.
The fear I usually hear from people is the fear of, how do I make payroll work? And let me tell you, when I started working in HR, payroll was a big deal. It was difficult. It couldn't be easier today. Software exists that makes it easy. Software providers, payroll providers exist that will help you navigate everything you need to know. They'll set you up and off you go. So that shouldn't be a fear.
So the final rule was published in January. It took effect in March. In your review of it, what's really changed? We did have Patrick Richter on at the end of January reviewing the final rule in our HR News episode then. But as you look at it, is this a nothing burger, or are the rules different, or the clarifications useful?
There aren't any major changes. What we've done is gone back to 2021, where we looked at all 6 factors instead of 2 high-level factors. The laws itself have not changed, but what we're saying now with this new ruling is it's going to be a lot more difficult to prove that this worker is a contractor than it was before.
And the government's main reason for this is tax collection, right? Because a lot of 1099 employees just don't file their taxes right. And if they don't get a 1099, they assume the government doesn't know about the income, and that happens a lot too. So this is a revenue thing for the government, but it's also, in a lot of circumstances, just a fairness situation.
It is. And I have a lot of people at this point argue with me, well, we live in a gig economy. I have all these workers who don't want to be employees. And the only thing I can tell you is, no, the laws have not caught up to the current economy, to the current work environment, and then repeat what I said before, and that is the burden of proof is on you, and it's not your decision, it's the government's decision how you're going to classify these people.
And you always have the option of hiring someone through a gig platform, right? I mean, or, not hiring them, engaging them. I shouldn't even say the word hired, but, through one of those gig platforms. But those folks are paying those employees like W-2 employees a lot of the time. And so that's just the reality. They're still going to get paid. But then that's one way to do, to have this additional labor. And maybe it's just for a specific project or whatever, but where they may otherwise qualify as a regular employee if you were to pay them directly.
And I've created a list of questions, or you can Google these. I've really compiled. I haven't created a list of questions. So if you're not sure, ask yourself. You just touched on, I think, one of the most important. And is this for a project, or is this somebody I'm going to keep on for the next 6, 9, 12 months?
So yeah, let's just go through the big picture. There's 6 factors, and I think what I drew out of the DOL stuff is just look at the economic reality of it, right? Let's just, and so I'll let you jump into that. But how would, what's your first evaluation when you start looking into this for employers?
Well, and there's no one factor that weighs heavier than the rest. From a practical standpoint, when I'm working with people, I find the biggest challenge is who's providing the tools and who's making the day-to-day decisions. If you look at that, that's going to answer the question 9 out of 10 times. It doesn't mean that this factor weighs any heavier than the rest, but did you provide, and by the way, tools include software, email addresses. It's not just the hand tools to go do a physical job. Are you telling them what to do and how to do it, or are you telling them what the outcome is? Because that's the difference between hiring an employee and hiring an organization to do a job that you don't want to do, right? I always pick on bookkeepers, right? It's one of the first things small businesses tend to outsource. So is a bookkeeper an employee? Well, if you're bringing them in the office and you're handing them your software and saying, here's what I want you to do. Here's when I want you to be here. Here's how I want you to do it. They're an employee. If you're engaging an organization and saying, here's my stuff, take care of it. I don't know what needs to happen, but you do.
Mm-hmm.
Oh, but I expect to have my reports by the 7th of every month. Oh, I just gave them a deadline. That's okay. That's part of the engagement in the agreement. But I'm not telling them how to do the job. I'm not telling them what tools to use. And
They're
I'm not
just
telling them
delivering
where
the product.
That's correct. My interpretation of this new ruling, one of the biggest changes, though, is what they are calling the integral piece to the business. So the extent to which the work performed is an integral part of the potential employer's business. And that's the one that tends to have the most debate. Mike, I don't know what you've heard around this, but I can argue that my bookkeeping is pretty integral to getting my business done. But I believe that the intent behind that is the actual work itself. So a bookkeeper is not integral to getting the work that we do here done. As a consultant, as an HR consultant, if I hire another HR consultant to go work with my client, that's integral. If I hire a bookkeeper to manage my books while this other consultant and I are out working with customers, that's not. So I believe that's what the intent of that is, but we're dealing with a government.
And again, it's a revenue thing, and the government's looking for revenue here. And I've heard both things. I've heard, okay, well, you're a marketing firm, so the people that are directly involved in the marketing stuff are integral to the business. But then I've also heard the other side is, well, this is one of the pillars of your business, finance. And this person's providing finance support on an ongoing basis, meets all the other tests. This isn't just a short project. This is, they're on an ongoing basis. They're coming into your office. All those other things also affect the determination, but you can't do business for very long without finance. And that's integral to, and so I would tell a client, err on the side of caution here, because the expense of a DOL action, even if you win it, is not worth the cost. And the cost of actually doing it and making this person an employee is not that significant compared to the risk and the time. And it's, it's one of those things where the individual is usually fine with it being 1099 until they're not. Suddenly this person's, I'm no longer using their services. Maybe I was their only customer, and now they have no income, so they go file unemployment. And that's, I think, where a lot of employers first find out that maybe we misclassified somebody, is because now I've got an unemployment claim why are they filing unemployment? They were a contractor or they were a contract employee. And so
that's the number one way businesses get caught, is through unemployment claims. So you have to be very careful about, and if you're hiring a 1099 worker, I would encourage you to find out what else they're doing, because this is where the real issue comes in, right? If they're working for you 40 hours a week over a long period of time, they're probably an employee no matter how you classify them.
Right.
And Mike, you say it's not more expensive. It shouldn't be more expensive at all if you're paying them correctly as a contractor, because you're paying contractors enough to cover taxes and downtime, etc. That's why contractors are more expensive than internal employees.
Right.
In theory.
So we talked about the nature of, or how integral the work is to the business. What are the other 6 factors that really jump out to you?
And I'm going to look at my cheat sheet here so I don't get it wrong. So opportunity for profit or loss.
So that's like running a real business too, right? Okay.
That's
so,
right. Who's making,
set up?
Who's making the decisions on the cost, right? I tell my clients how much I cost. As an employee, I'm going to go in and they're going to tell me how much they're willing to pay me, right? And then there's the cost of the services as well. right? Who's setting those? The investment. Who's making the investment? Is it the employer or is it the worker?
So is the employer buying the equipment, the computers, all of that, or is it the individual doing it?
Exactly. The degree of permanence. Am I hiring you for 1 3-month contract, 1 3-month project, or are you going to work for me over the next 24 months? The latter would insinuate that you might be an employee.
Well, and what happens there a lot of times is that we start with this. Oh, we're going to do this one project, and 20 hours a week for 6 weeks till we finish the project. That's great. Oh, but there's more work to do. And we keep going, and you look up, and this person's worked for you for an ongoing basis for a longer period of time. And when you look at the rest of the 6 factors, this was temporary, but was it really temporary? And temporary is just one of the factors, so it doesn't eliminate all the others. So you hear a lot from, oh, she's a stay-at-home mom. She only works 20 hours a week for me, and it's temporary. We're just, while during our busy season, I'd argue she's not set up as a business. She's not taking any risk here, right? So just because it's short term, I don't even think necessarily eliminates them from, especially if it's something core to your business, like you're a marketing company and you're bringing in a graphic artist who really isn't out there marketing themselves as a graphic artist for hire. Suddenly you're in the business.
I get a lot of people who think part-time means contract. It doesn't. You can hire, and I think that designer is a perfect example. I only hire you when I have projects, but you're still my employee if you meet all those other factors.
Right.
The nature and degree of control. Who's setting the schedule? Who's deciding where you work? Right? I want you in my office at 9 o'clock on Monday morning. You're probably an employee.
And I think a lot of employers may say, well, you just work when you want to work. But then the first Monday, that person's not there at 9 a.m. and I have a question for them. I'm getting annoyed. Okay, I need you here at 9 o'clock so you can do. And suddenly, now you're treating them really like an employee.
And you've got to be very careful. You can lay it all out. Like I said, I have a lot of conversations trying to justify why an organization is doing it a certain way. And you may lay it out exactly right. You may read all the things, lay it out all correctly, but then we slip into employee-based behavior over time.
Well, and that goes back to the time issue too. I mean, we're going to fall into those habits as time goes on.
And you can never go wrong classifying somebody as an employee.
Right.
You can go wrong classifying somebody as a contractor from time to time. And then there's two more factors we haven't touched on, and that is the integral part to the business, which we talked about earlier, and then skill and initiative. And this is one we don't talk about a lot, but I think it's one of the vaguer pieces, and it's one of the more confusing pieces. If I hire you, Mike, for your expertise in background checks, and I just say, hey, I need somebody to come in and do background checks all day long at my business, I may be able to justify that, probably not, but I may be able to justify that as a contractor, as opposed to, Mike, you hire me in and saying, I need somebody to help me with this process inside my business. Krystal, let me teach you how we do things and show you what we're doing. So that's really based on, are you training the employee? The worker? Are you training the worker? Or are they coming in knowing how to do their part? And don't get me wrong, I just had this conversation earlier today with one of my clients. We train everybody. I don't care how big of an expert you are in your field. We have to train people about how our businesses operate. But are we training them in what they're good at, in what we hired them to do? Or are we training them in us, in our business?
Yeah, well, you mentioned, I do get those consulting gigs where a client, usually a new background screening client, will bring me in for 2 or 3 days. I sit down with management, figure out what the risks are with different jobs, help them develop their policies, what kind of criminal behavior is of concern for different kinds of roles and all of that. And we build out, our policies and a matrix of, risk associated with different past behaviors for specific jobs. And I'm there 2 or 3 days and then may come back and do some work here, preparing their policies for them. But that's a brief engagement with expertise that I have that they don't have. They don't need in-house. And it's a consult, but I also have a corporate entity behind me. I am paid through that corporate entity. And they're not paying my Coffey, and it's not a flow through. It's going to my company. It's covering my overhead, my expenses. I'm running it like a business,
and multiple other clients.
Right. Oh yeah, for sure. So, I think that's one of the big tests here. But it is possible that you've got a bookkeeper who works for you 15 hours every week. And she works for 2 other employers 15 hours a week. People do have multiple jobs, right? Mm-hmm. And that doesn't automatically mean that person is a contract bookkeeper, an independent contractor bookkeeper. If this is part of your business, you're paying them on you pay them on your regular payroll schedule, those kind of things. All kinds, you just got to think. I think employers need to think through. Where I'm seeing a lot of employers squawking right now, especially in the trades business, roofers and even plumbers and people like that. Well, our outside salespeople who knock doors for us and who bring in customers, we've always paid them on a straight commission basis as 1099, and now we've got to bring them in as employees. What are you talking about? I can't afford them as employees because I have to, I think there are misunderstandings about how you necessarily have to pay a salesperson. Minimum wage is one thing versus, if you tell them maybe you'll earn $70,000 or $100,000 this year based on your commissions, that's great. But it may not be that much more expensive to have them on as a W-2 employee. And if they're not producing, get rid of them anyway, either whether you've got them as a 1099 or a regular employee.
That's right. We're making business decisions here. Another mistake I see, and you talk about paying them on a payroll cycle, our payroll companies are making it very easy to pay both 1099 and W-2 employees at the same time, but you're starting to blur lines. I'm working with a company right now who has a bunch of 1099s, and they get benefits. Many of them get benefits. That was the look on my face as well. That doesn't sound like and I love that you're trying to take care of your people, but for what you're doing, let's transition them into actual employees so the state and the federal government don't come after you as a business.
Well, and as soon as you start calling them your employees, or I start referring to them as my employees or my people, suddenly there's a tacit understanding there that they are mine, that, I wouldn't want them going to work for my biggest competitor.
Now let's talk about 2 of the biggest mistakes I see. The first one is I'm going to hire you for the first 90 days as a contractor to see if you work out. I'm not going to bother to put you on payroll. You know what that does? That triggers an IRS audit when you send in a 1099 and a W-2 for the same person, multiple people in the same year.
Right. But everybody's got that idea of a probation period, right? And I think probation periods are stupid anyway. I've never thought they were good. They've never, if you're in a union organized environment, there's some relevance to what that means. But for a regular employee who's not in an organized environment, you bring them in, you train them to do the job. You make the determination along the way. Maybe it's at 3 weeks you realize, they're not going to get this. Why are you going to waste their time and yours to waiting out this 90 days? Let's get rid of them. If they're, help them, move on. Right. We made a hiring mistake, and let's just not drag it out 3 months. But this whole 90-day thing is, I don't know of any state where that's really relevant outside of an organized environment, and nothing in federal law suggests it even makes sense.
It isn't. The state is going to treat it the exact same way as somebody who doesn't have it. They're going to treat it the same way at 2 weeks as they are at 6 months, except they're going to recognize that you moved quickly at 2 weeks.
And let's take a quick break. Good Morning HR is brought to you by Imperative, bulletproof background checks with fast and friendly service. For 25 years, Imperative has helped risk-averse clients make well-informed decisions about the people they involve in their business. Whether that means very thorough pre-employment background checks, due diligence for family offices or private equity firms, or any other kind of business transaction, if there are people involved, there's risk involved. We help businesses mitigate that risk. You can learn more at imperativeinfo.com. If you're an HRCI or SHRM certified professional, this episode of Good Morning HR has been pre-approved for 1/2 hour of recertification credit. To obtain the recertification information, visit goodmorninghr.com and click on Research Credits. Then select episode 148 and enter the keyword 1099. That's 1099. And if you're looking for even more recertification credit, check out the webinars page at imperativeinfo.com. And now back to my conversation with Krystal Yates. So you mentioned, and I cut you off though, but you had mentioned that, and then the other one you were going to the other big mistake.
The other mistake is I'm going to hire you as a 1099, but before I do, I'm going to send you to LegalZoom or somewhere like that and make you form an LLC, form an entity, so I can pay the entity and not you directly. And that's a pretty little mask, and it creates some fog in between, but it doesn't change the basic fact that they are still meeting every other 1099 factor and should still be considered, every other employee factor and should be being paid as an employee. And I have seen people do this for years and years and not get caught, or tell me other people in my industry do this and it's fine. And again, I'm going to say, remember that the burden of proof is on you. And it's a very, very expensive mistake to make. And it's a very, very easy fix to put in place to do it the right way and never get fined and back taxed.
And I tell my clients, if you're looking at somebody and they're coming to you saying they want to work as a consultant, as an outside, as a 1099, independent contractor, all that. Okay, show me your website. Show me your marketing materials. Show me the corporate entity. How long have you been in business? And let's establish and let's print that stuff off right from the Secretary of State's website. Let's capture those marketing materials. Let's do all of that to demonstrate this person represented themselves as somebody who was out there setting themselves up as an independent business, and we hired them with that understanding, and we've got the documentation to show that it was in good faith, that we weren't trying to skirt the FLSA in this process. But like you say, I also talk to, I see it on some of the HR conversation boards. Somebody gets on and says, hey, I got this new employer, and the first thing they told me was to go create an LLC, and they're going to pay me, I'll make more money this way, which means that they're not doing withholding taxes. You're not going to make more money the long distance. Right. So I think that's kind of one of the issues. And so I think that boils back to HR knowing what's going on, though, because how often in a larger organization, HR doesn't know what the IT department's doing. And so IT may say, oh, we need this expertise. We can't, HR is not filling our role, so we're going to bring in a contractor. And maybe they go through procurement, maybe they don't. Maybe they're just putting it in as an expense or something, accounting. So you need procurement, accounting. Everybody needs to be paying attention to when we're adding new vendors or anything like that to understand what's going on.
And what those vendors look like. And if a vendor's working for you 40 hours a week, if it's 2-week period, maybe it's a project. But if it's long-term, you definitely want to take a step back and go, we've paid this vendor an awful lot of money based on our understanding of this project. Let's double check this.
And is this vendor one person? Or are we getting multiple people? Do we have a project manager or maybe 2 or 3 people we've never met working in the background? That looks more like a vendor than just one person who shows up and does this thing for us on an ongoing basis, day to day.
And is sitting right next to 5 employees doing the same thing.
Sending emails from our domain, answering phone calls in our office directly on our phone lines and all that.
Right.
Well, we're almost out of time. Anything else you think would be really helpful for an employer to consider when they're trying to do this assessment between an independent contractor and an actual employee?
If you find yourself as an employer trying to find justification or trying to make yourself fit within the loopholes of the verbiage, because let's face it, it's going to go to court, it's going to get reviewed, it's still going to be very expensive even if you win. But if you find yourself trying to fit in that legislation, you're probably better off making that person an employee.
Even if they're an employee for 6 months, 3
That's
months,
right.
whatever, just take them off. And now you've got them. Next time you need to engage with them, you bring them back in as a regular employee, and you pay the taxes, you do the withholding, and you just manage it. But the other thing that people need to remember is you don't pay independent contractors overtime, but you will pay this employee overtime if they work more than 40 hours and they're not FLSA exempt. So. But, well, thank you, Krystal. That's all the time we have, but I sure appreciate you joining me.
Oh, Mike, I enjoyed being on here and sharing one of my favorite topics.
Good. Well, we'll see you soon.
Thank you.
And thank you for listening. You can comment on this episode or search our previous episodes at goodmorninghr.com or on Facebook, Instagram, or YouTube. And don't forget to follow us wherever you get your podcasts. Rob Upchurch is our technical producer, and you can reach him at robmakespods.com. And thank you to Imperatives Marketing Coordinator, Marianne Hernandez, who keeps the trains running on time. And I'm Mike Coffey. As always, don't hesitate to reach out if I can be of service to you personally or professionally. I'll see you next week, and until then, be well, do good, and keep your chin up.